All right, and viewers, we'll switch focus. We'll go to corporate conversations now. Shwetank Singh, Executive Director at Chalet Hotels, joining us this morning to try and get us a sense of what's playing out in the hospitality space. Shwetank, Q3 is now behind us, and I fully understand that you're on silent period. But talk to us about the trends that have played out all the way up to Q2. We've seen a bit of a cool-off with regard to all of your numbers when it comes to average daily revenue, etc. How are the trends playing out, and what are you expecting in terms of 2026 as a year to be? Can there be significant uptick with regard to both demand as well as revenue per available room, as one would quantify it?
Yeah, good morning. Thank you for having me on the show. Not strictly true the way you have summarized the performance on first half of this year. And actually the rates, the average daily rate has grown nearly 16%, nearly 15-16%, and our overall revenue from hospitality grew by 16%, with EBITDA at about 15% growth. And actually with the commercial real estate business, our business grew by 24% on revenue, and on EBITDA by 31%. So a very healthy first half as well. Second half typically tends to be much stronger. If you were to take a broad ratio, about 45% of the revenue for the year comes through in first half, while the second half brings in 55% of the revenue. And if you sort of break it down further between business and leisure, the leisure locations, the leisure locations tend to have a little bit more of a skew at 60 versus 40 in half one. And this is typically driven by social dates, and also the fact that weather is helpful. So even corporates like to do their MICE events at this time. So overall, second half of the year is always stronger, and it continues to be so this year as well. We have finished quarter three, as you said, and we are looking really good on the results. We are in the silent period, so difficult to give out the exact numbers, but it's comfortably north of mid-teens. So we are looking very strong with respect to quarter three, and then for quarter four also. Overall, I think the fundamentals of the industry still haven't changed. The demand-supply arbitrage still exists, and in fact, both leisure and business is expected to stay strong for the next 3 to 4 years. So no stress overall.
Perfect, Shwetank. I stand corrected. My apologies, because I read the numbers incorrectly. So yes, numbers look much stronger. Talk to us about this Rajasthan foray. What does it mean? What's the rationale? What's the growth outlook? How many keys do you put up? And how quickly does it kickstart?
Yeah, okay. Thank you. It is one of our recent sort of targets.
Right.
In general, we have always maintained that we want to have 20% of our portfolio in the leisure space. With that in mind, the way we define leisure as deep markets, which is deep tourism markets with an additional demand driver like a social for Udaipur or a Jaipur or even Goa. And otherwise, we define leisure as drivable distance from key airports. With that strategy, Udaipur fits right in. Currently, the one that we are targeting, of course, the due diligence is still going on. We have a few hoops to close before we actually close the deal. I can tell you that currently the resort that we have bought we are looking to buy is about 144 odd keys. The total transaction cost, as we have reported, is around 170 crores. What we are looking to is, of course, it has potential to expand. I'm unable to give you an exact number because we are doing the due diligence on how much expansion potential there is. But that is a model that we like. We like operating hotels with the potential to expand. It gives us much better returns on the additional capex that you bring in on the expansion side. So that's the idea. Where we are looking to, if we close this deal over the next 30 to 60 days, then we'll need another 24 months to sort of refurbish the place and reopen with the expansion. So that's the plan right now.
Okay, so that sounds positive. Shwetank, hi, morning. Talk to us about your FY28 guidance. Your owned keys is expected to grow 36% by FY28. You're aiming for 3,959 keys. You're already at 3,389 thereabouts. Talk to us about what the growth plan is and how quickly are you going to be achieving this guidance? Are you on track to reach there by FY28?
Yes, overall we are. Development is a tricky game, and a lot of the devil lies in the execution, as you're well aware. But having said that, we are broadly online, and our overall expansion plan today, actually, the announced pipeline takes us to about 4,600 keys and another zero point 0.9 million square foot of commercial space. But what's also important to understand that this is not where we are going to stop. We are in full expansion mode right now. And with the current conversations that are going on both within the larger K Raheja group as well as our conversations with other owners, we are very comfortably looking at crossing the 5,000 keys mark by 2029-2030. So overall expansion plans are in place.
Okay, so that sounds good. And Shwetank, last time we spoke, you guided for double-digit RevPAR growth also. Are you on track for that for FY26 itself?
Without giving away much, yes.
Sure. Okay, and let's talk about how your recently launched Athiva brand is shaping up. How has the performance been so far?
Yeah, so Athiva we have announced in two parts. One is the opening of the first Athiva, which was the erstwhile Dukes. That's open to public. We started full operations in November on November 14th. So that's open to public, and the uptake has been really good. We have already had 5 or 6 sold out days from November 14th onwards. Both mice and socials have reacted very positively to it, and of course Dukes has a big fan following both in Mumbai and Pune market. So so far it's all looking good. The uptake is good. Having said that, the second Athiva opens in Navi Mumbai in March, April of this year, or March of this current financial year, or 1st April is where we are scheduling it to sort of open. That will be our second Athiva. Overall, we have sort of announced 900 keys under the Athiva brand. But currently, the plan is to stay within our hotel portfolio, so we are not planning to go third party. It's just that it opens a door for us for a potential expansion in the future. Right now, we are in the experimentation phase while we are trying to put the brand on its 2 feet and sort of prove to the public that this is something we can do and do to quality and consistently.
Shwetank, if I were to also try and get or understand what's happening with occupancy. We've seen a bit of a cool off in H1. Correct me if I'm wrong. Talk to us about what's happening or what's likely to happen in H2. Can occupancy inch back above the 70% mark in H2, you reckon?
Yeah. So let's sort of fully analyze this occupancy piece. Some of the cool off that you see is actually coming because resorts came into our portfolio. Resorts typically don't tend to operate in the 80-90% occupancy range. In fact, the highest a resort typically tends to be is in the 60 to 65% occupancy range. Having said that, in half one we had a couple of perfect storms. One was through the difficult times we had with our neighbors with the war, and the second one was actually untimely and unseasonal and a lot of rain, especially in the hills. So both our resorts at Kotyad, Aravali, as well as the one in the Himalayas, did perform to potential, and therefore there was a big pull down on the overall occupancy, and therefore the blended occupancy looks lower. Having said that, our south hotels, both Hyderabad and Bangalore, were really positive, and we grew both occupancy and ADR in those hotels by a very substantial number. Mumbai always tends to operate at a very high occupancy, and there has been a little bit compression in especially the airport market, mainly because some new supply came in. But having said that, in the second half of the year, we see both occupancy and rates correcting themselves very favorably to give us overall fantastic results.
Okay, Shwetank, so good to be chatting with you, and wishing you and your team a very happy new year once again. Thanks so much for your time.
Same to you. Thank you.
Okay, viewers, on that note, time to slip into a very short break. Just taking a look at what the index is doing right now. Nifty continues to be mildly under pressure, but yes, below that 26,150.